Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, November the 8th. So happy Wednesday, happy hump day. And I normally say, you would be happy if you were long or short, but today was kind of a mix mash up, down, kind of finished where we started. Looks like the SPX, the S&P ended up about 4 points on the day. So not a lot going on if you just looked at the end of the day. So, it's up and down and back up and down and kind of where we started. So much more calm than the last week or two. We've had the crazy run higher after the last Fed meeting, which I'm still scratching my head because the market seems to want to interpret things different than what the Fed actually says in the Fed meeting. The market said the Fed's done hiking rates and now they're going to start cutting rates, and now we're off to the races and everything's great. And that's not what the Fed said. And of course we know it can change. Obviously it's a fluid thing because the Fed, based on data points and all that kind of stuff, but they're watching inflation. So what we have to do is kind of watch what they're watching and interpret or see if we can estimate how they might interpret the data that's coming out. We're watching GDP, we're watching CPI, PPI, and payrolls and things like that. We do have another Fed meeting next month in December, and I do not think they're going to raise rates in that meeting. So, chances are we do go higher, and I think we do go higher either way into the end of the year. And I'm just talking about the broad market, but let's look at the S&P and the ES here in particular, and I'll show you what I'm talking about. So let me switch this over. Well, we'll go and look at a 20-day chart here. And as you can see, 20 days ago we were at 44.30. This is ES, and we're just down, 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 down. This is the waterfall effect, as I call it, down to 4,100, and then it's moonshot off to the races, almost back to where we were, over here. Now let me switch this to SPX and right here. And excuse me, as you can see, on SPX we went from 40. We watch, as traders, we tend to watch ES for levels on price charts because you get 24-hour data feed and all that kind of stuff. But we trade more often than not. We trade SPX. I do trade ES, but more often than not trade SPX. So 20 days ago we're at 43.93. So basically 4,400, and all the way down here to 4,100, and all the way back up. Guess where we are? About where we were. Right? 20 days. So a whole lot goes on in 20 days. So if you're extremely gifted, talented, lucky, you short, and then you magically know, oh, go long here, and you're long here. But in the real world, that's not what typically happens, because no one is expecting, everyone is expecting typically, this level's going to hold and we're going to bounce, this level will hold and bounce, this level will hold and bounce, etc. This level's going to come up here and fail, or this is going to fail off our fire line there, it's going to fail off the tree line, and it does none of those, right? So very hard to read this market. Now we are still making money. It's still a good market. We're up pretty nicely for the year in the bias account, or the bias room that I manage, and manage that for 10 years. And we've actually never had a down year. And we're doing fine in there overall, but it's tough. It's tough trading because, again, we get these one-way moves. I mean, see this straight down, all the way down. That support held straight back up. So what happens now? Do we break through and keep going, or do we fail and come back down? And this trend is down. So I have a mixed answer. I think these are 34 EMAs right here. I think we kind of or bumping our head on the ceiling, perhaps. I said this in last week's video. I think we pull back down into these moving averages here, kind of catch our breath, and then start making our way up here. I think, because it's the main thing we're watching now. Of course, we got Middle East and all that stuff going on. That's not as pressing on the market itself as, bond rates and inflation and all of the things, that we're watching. So we're getting obviously very close to the light at the end of the tunnel on no more rate hikes, and maybe we are done. I don't know. The Fed is kind of 50-50. I don't think we'll have one at the next Fed meeting, but I think it's too early to say, let's buy everything we can because this is the best market we've ever had, right? We're not there yet. So again, short term, I think we probably pull back here a little bit, catch our breath, and continue higher. That's just the way it typically works. And we're basically finished with the earnings season. We've got a lot of scattered earnings from smaller companies, but the big tech names have already reported and all that kind of stuff. We know what's going on there. The last one of the bunch is NVIDIA, that reports on November 21st. So outside of some news that we don't know, maybe we have a reversal in the bond market or something. I don't know. We could just go straight here and just keep going and do one of these kind of things, pop up and just pop up and keep going, right? Maybe. I don't know. That would actually be better for me because I'm net long into the end of the year, and I'm kind of on both sides of the market. I've got some hedging on the downside, and I'm long on the upside in SPX and SPY. So, and I got a little hedging on the diamonds on the downside, DIA. But it's just that's part of trading. But anyway, that is what I'm looking at here in the market. That's the ES. The NASDAQ looks in better shape. This does look a little. We didn't have near the pullback here, that we've had in the S&P. This one has been more sideways like this. It does look like it wants to break out higher. The NASDAQ will pull the S&P up higher with it, most likely. So again, we shall see here. The bottom line is that we're watching. We got a lot of Fed speak the rest of this week. We're watching all the indicators that we can. We'll have PPI and CPI coming out. We'll watch that for inflation hints, and then we'll kind of try to anticipate what the Fed might do. But generally, everything looks pretty good. All the moving averages are on the side of the bulls and all that kind of stuff. But we've moved a long way in a very short period of time, so just be careful. And again, I'm trying to kind of work both sides, being not necessarily short, but kind of fading this to the downside with an eye on being, I am more long than short into the end of the year for the next several months, put it that way, or in at least like first quarter next year. So that's what I've got. That's what I'm looking at. Hope it helps. Not anything too specific because we don't really have anything specific to go on, because one last thing, the last time we broke above these 34s, we're going to go here. We're off to the races, and we got a head fake, and we're off to the races, and we got a head fake, and then we never even got over 34 here. We're above it, just like we were here, and just like we were here. Is that gonna, again, are we gonna break out this way, or are we gonna come back this way? And I think it's both. I think we come down and then come back up. So be careful, size appropriately, and you can actually do bigger size, but just if you do some reasonable hedging and or tight stops, that kind of thing, and you can still navigate this market pretty well. If you need help or questions or anything like that, come see me in the bias room at Simpler Trading, or the main room. I'm in there all the time as well. We got some really good traders in there, so if we can help, let us know. So thanks for the time, and I'll talk to you guys soon. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me